CFO, Canara Bank, heartily welcome all our investors and analysts for this call. Today here we have with us our MD and CEO Shri Satyanarayana Rajuji, Shri Devashish Mukherjee, Shri Ashok Chandra and ED Shri Hardeep Singh Ahluwalia. All three EDs are present, and we also have with us members of senior management with us. How do you like to do that, Raju sir? Would you like Mr. Raju to give a brief presentation and then start, or straight away you want to start?
Hi, so good afternoon, everyone. On behalf of Antique Stock Broking, we welcome you all. We have on the Canara Bank management team Mr. K. Satyanarayana Raju, MD and CEO, sir, Mr. Devashish Mukherjee, Executive Director, Mr. Ashok Chandra, Executive Director, Mr. Hardeep Singh Ahluwalia, Executive Director, along with senior members of the team. Thank you, sir, for giving us this opportunity to host the call. Without further ado, I hand over the call to MD sir for his opening remarks, and post which we can open the floor for any Q&A. Thank you, and over to you, sir.
Not audible.
Not.
Hello.
स्पीकर लेकर हेलो हेलो
Can you hear me, sir?
ये बट आप वहां से बोलिए.
Is it audible now?
Yes, audible.
Okay.
Can you hear me, sir, now?
Yes, sir.
So, good evening to all of you, all the well-wishers, investors and analysts. For the quarter June current year, our Canara Bank global business has grown year on year at 9.38% and stood at 20.80 lakh crore. Our gross advances have shown a 13.27% growth year on year and stood at 8.87 lakh crore. We have recorded a highest operating profit and net profit with a profit year on year growth rate of 15.11%. Our operating profit stood at 7,604 crore and our net profit has stood at 3,535 crore with a year on year growth rate of 74.83%. This high operating profit and net profit is possible with our net interest income growth of 27.72% year on year and stood at 8,666. Our RAM credit grown at 12.89% year on year. It is in line with our total advances growth, so that we could maintain our cost, the corporate and the RAM, the percentage of 45% and 55%. Our gross NPA has come down to 5.15% with a year-on-year decline of 183 basis points. Our net NPA has come down to 1.57% with a year-on-year decline of 91 basis points. These two things we could achieve it, and with our PCR is crossed 88%. This is an improvement of more than 350 basis points. Our RAM sector growth, led by our gold loan, has improved a 30%, almost recorded a 30% year-on-year growth and stood at 1,29,800 crores. Our retail credit has grown at 10.64%, and within this retail credit, our housing loan is the major component, which has grown at year-on-year 13.64% and stood at 85,884. Our return on equity, it has now reached to the 22.95% with an year-on-year improvement of 662 basis points. Our cost to income ratio has gone down to the bottom. Almost is the best in the so far in the last several years, that our cost to income has reached to the 43.61% with an year-on-year improvement of 115 basis points. Our return on asset almost reached to the 1% and stood at 0.99% with an year-on-year improvement of 34 basis points. Our CRAR is maintained continuously above 16%, whereas the peer banks are at 14 to 15%. Our net interest margin, NIM, the last year the cumulative NIM is 2.92. As against that, our NIM in the current quarter we could maintain at 3.05%. And these are all the few features what we could share it with you. And I am now the open dais is open for you for interacting. I am having along with me our executive director Shri Devashish Mukherjee sir and the Ashok Chandra and the Hardeep Ahluwalia. Now it's the word dais is open for the interaction, sir. We are open for answering any of your queries or the clarifications.
Okay, so we have our first question from Mona Khetan. Please go ahead.
Yeah, hi sir, good evening. Thank you for taking up
Good
my
evening,
question.
Mona ji.
Hi, I just have two questions, sir. So firstly, on the gold.
Little more voice is low. Little more.
Is it better now?
I'll try to understand. You tell me, madam.
Okay. So I just wanted some more clarity on the gold book, which stands at about 1.3 lakh crore today. So how much of this would be agri versus non-agri? What would be the yields here? And if you could just give some color on what sort of network is also enabled, the branch network is enabled for gold lending versus, a couple of years back. Thank you.
Yes, madam. Actually, gold loan portfolio, our average yield is around 8.80. In addition to that, it's an interest yield, whatever I am speaking about that. Our total out of this is majority is from the agriculture lending. The reason is our composition of the branches is 60% is in rural and semi-urban. The urban and metropolitan, our gold loan contribution is comparatively is less. There we are getting on an average around 7,000 is under the retail and 4 to 5,000 under the MSME. These two are there. If you remove that, the remaining entire portfolio is agriculture. How we are able to establish this growth is just doubling that in 3 years. We have identified certain pockets where we felt that there is a very heavy potential is there, and we have identified such almost 500 near to the 500 jewel loan shops. We created within the branches a separate cells, and it is equipped with the staff and the machinery. These jewel loan shops have been given with quality testing machines, and these people will be exclusively for delivering the gold loan product. So that has helped us in actually the gold loan. Whenever you want any customer comes, they comes for the raising the loan against the gold only when it is an emergency. So the TAT matters for the growth. That TAT we addressed by creating an exclusive counters in various branches. Not only these 500 branches, in other almost 1500 to 1600 branches also separate counters have been created to address this and to promptly respond to the request of the customers. That has created a confidence among the public, and whatever the growth is there, now it is a walk-in growth, madam.
Okay. So while you said majority of the book is agri gold, what would be the percentage, if I may understand better?
That's what I'm around 85% will be the agriculture gold, madam. That's the reason is the majority of this gold loan portfolio we see from our 60% of rural and semi-urban.
Got it. And when I look at your network of 9,600 plus branches, How much of it is enabled for gold lending, if I may understand?
No, actually, our 9,200 branches are retail branches, sir. And almost more than 6,000 branches are opened for that lending to the gold. But the gold loans in the north sector is minimal because there it's picking up will be it's taking, but there is a growth. But when you look at the volumes from the South India and the North India, there is an ample difference. But the majority of the business what we are getting out of these 1,30,000 is around 80% is from the South India, madam.
Got it. And just one final point on this. So, if I have to look at 2 to 3 years back, what would be the network against the 6,000, which is today gold enabled for you?
Almost 100% we doubled that network, madam.
So it was say
So
about
earlier it was
3,000.
around the 3,000. Now we increase it to 6,000.
Got it. And just one last thing on the provisioning side. So apart from your PCR provisions and or NPA provisions and general provisions on standard assets, what else do we hold on the prudential side, if anything? Standard prudential provisions?
No, actually, the whatever the stipulated provisions beyond that, generally there are under the regulatory requirements. Based on that only we follow that provisioning. But NPA is within this quarter, whatever the quarter we are telling that in this we have provided more than 800 crores beyond the requirement. The stipulated requirements say more than that 800 crore we have provided that to strengthen our PCR. And every quarter almost we are doing that to strengthen our PCR, but historically our PCR compared to other peer banks, we are at lower side. So we want to, till we reach at par with other banks, we continue to provide this additional amounts every quarter to see that our PCR crosses 90%.
Got it, sir. Thank you. I'll come back in the queue.
Thank you, Monaji.
Thank you. We have our next question from the line of Maruk Ajania. Please unmute yourself and go ahead. Maruk.
Hello, sir. Can you hear me?
Yes,
Hello?
Maruk, madam. Maruk ji, you can speak.
Hello, sir. Can you hear me?
Yes, madam, I can hear you. You can tell.
Hello. Yes. Sir, so my first question is on your margins. So your margins improved slightly in the first quarter, but your deposits have not grown because your liquidity is good. So when your loan growth actually picks up in the busy season and you will have to mobilize much more deposits, how will your margins behave? Will you be able to maintain margins given that yields will now be stagnant? Or will margins fall if deposit mobilization increases?
Madam, you are aware about that our CD ratio earlier it was only 73% and we can, there is a scope to go up to even 78%. And we have given in the starting of the financial year that our CD ratio what we are looking at is a 75%. And we are moving on that. With keeping that, we expect that our credit growth will be much higher than our deposit growth. And the first quarter on quarter also our deposit growth is, madam, it's there around 1% to 1 point above the 1%. It's not that the first quarter there is a growth in the deposits, but that has impacted that. So whatever the high cost of deposits, all our existing deposits have been repriced, and there is no such pendency at our level. So our interest expenses already reached the peak at that level. But future whatever the growth, still in our existing system, there is a cushion for us to expand our CD ratio. That is a one plus point for us. The second plus point is we have taken enormous number of initiatives targeting the CASA. On the first working day of this current financial year on April 3rd, we have taken several initiatives aiming only for the focus on the CASA and the liability products. This CASA we have introduced the first time in India that targeting a salaried class by offering a term life insurance from 1 lakh to 6 lakhs depending on their gross salary in the form of 4 products: silver, gold, diamond and the platinum. And our earlier, before commencing this product, before launching this product, our entire bank, the salaried class customers were around 11 lakhs. But by introducing this in the first quarter itself, last 3 months, we got a traction. We could onboard more than 3 lakh 10,000 customers who has opted Canara Bank accounts as their salary dispersing accounts. The second one is non-salaried class. We also introduced a select product with free of zero charges, and that is also for non-salaried class in especially urban and semi-urban areas. That has got a good traction, and we could onboard in the last 3 months more than 70,000 such. In these accounts, average balance will be little high, and those customers have opened more than 72 73,000. And we also introduced a relationship manager concept from 1st July onwards in 5,000 top savings bank concentrated branches, covering 80% of high net worth individuals of our bank. So this also we feel that it will support our CASA efforts in the coming quarters. You can look at that the Canara Bank could maintain even under such circumstances that we could maintain further deterioration we could not see in the CASA, because in savings bank even quarter on quarter we could see a more than 1.5% growth. The overall CASA, it is stagnated in the last quarter, but if you look at the savings bank growth is around 1.68% growth is there in quarter on quarter, madam. These initiatives, in addition to that, whatever the term liability, the term deposits growth, and we also launched the recurring deposit aiming for 1,000 crores target. Several initiatives have been taken. These things will compensate our interest rate expenses. But I agree with you that there is a stress on interest expenses, but we are confident that we can manage our NIM at 3 and little above the 3.
Okay, that's so helpful, sir. So my next question is really on loan growth. So you think you'll be able to maintain 13% loan growth, or it could get higher in the busy season on a year-on-year basis?
So from my side, sir, madam, from bank side, we are given a guidance that this year we show a growth of reasonable growth of 10.5% in the loan growth. But when I interacted last time with all of you, we are told that we informed you that then we are expecting our credit growth will be between the 12% to 14%. Generally, you all aware that in the first quarter, the credit growth will be little comparatively sluggish when you compare with the remaining quarters. But in the first quarter itself, in the domestic credit, we have shown more than 3% growth. Even if you take that 3% into 4 quarters, what we have promised is already achieving it. The remaining is, this much I can tell you that whatever the growth rate we have shown to you, that will be a minimum growth rate.
Okay, so sir, I just have one more question on PSLC. PSLC income usually comes in the first quarter, or it will come through all quarters? Because it's big, obviously.
No, madam. No, madam. Generally, in every year, PSLC in the first quarter, you get a higher margins. So generally, the banks prefer to take the advantage in the first quarter. Second quarter, something will be there, but not in line with the first quarter.
Okay, and third, fourth, nothing much, right? So this is
no, so nothing much, madam. Nothing much, very nominal amount.
Okay, okay. So this is kind of reflects the full year PSLC income also.
Yes, madam, definitely.
Okay, sir. Thank you so much. All the best.
Thank you,
madam.
We have our next question from the line of Sridhar Shivaram. Please unmute yourself and go ahead.
Hello. Yeah. Thanks. Sir, can you hear me?
Good evening, Sridharji.
Yeah, good evening. Sir, I have my question is more to get some guidance from the management on how we should look at the numbers for the current financial year. One is operating profit. You've grown at 15% roughly in the first quarter. Is it fair to expect operating profit growth somewhere in the range of 15 to 16% for the full year? And the second one is on the provisioning, roughly about 2,700 crores of provisioning for the first quarter. Should we expect around 10,000 crores full year provisioning numbers?
Sir, one is first the first one
operating profit.
Operating profit, sir. Operating profit. Operating profit last year we could show 20%, sir, but this year because of that high interest rate regime and the interest expenses for mobilizing the deposits, there is a stress on our margins. That's why we could show only 15.11%. We expect that in the current quarter also the stress will continue on the interest expenses. So the next we may in the liquidity, once in the system liquidity improves, in the third quarter and fourth quarter we may see slightly decrease in these interest expenses. So we expect that at this moment a double digit, we are confident that we can manage the double digit growth, but our endeavor is to maintain that what the present growth we have shown that.
And provisioning,
The second
sir?
one is regarding the PCR. The PCR, second one is the PCR, the provision coverage ratio. You asked,
No,
sir?
it is no. I asked the absolute
Provisions.
provisioning.
The
10,000
provisioning.
crore full year number.
Yes, sir. Actually, definitely, what's the actually the if you look at that, the compared to peer banks, our provision coverage ratio was historically low. But now we could recoup to the major extent, but still there is a gap between the Canara Bank and the other public sector peer banks. There is a gap for to fill that, to strengthen our balance sheet. That's why we are in initial stages also we are given a guidance to you that we will continue to every quarter to strengthen our PCR. In that direction only we are providing this 2,400 or 2,500 crore whatever is there. It will continue till we cross that 90% PCR, sir.
So, sir, based on this, roughly, is it fair to expect that we'll reach somewhere in the 15 to 16,000 crore full year PAT number?
Sir, the first quarter we are given you 3,535. Henna, sir. And you
Yes, sir.
can look at our last maybe at 11 quarters or 12 quarters growth what we are showing. And quarter on quarter also you can look at that what we are showing is. So that graphs gives you a clear picture on that. You just look at that our net profits. So 1 year back it was 2022. Now we have 35. Every quarter on quarter also we are steadily growing, and we expect that the next 3 quarters also we will continue this steady growth. But absolute numbers, let us see that whatever we are given the guidance, we will be much above than the guidance.
Sir, my last question is on the dividend policy. Last year you paid 12 rupee dividend, so that's roughly about 22% of the profit. Is that a number consistent we should expect even for the coming year?
Yes, sir. Actually, being a public sector bank, we are supposed to announce a minimum 20% of our net profit as our dividend. So it
Okay.
depends on how much we give the dividend depends on my net profit. But we continue to give that minimum 20% dividend every year.
Okay, so then if all goes well, your dividend could be in the range of 18 to 20 rupees.
It's left to you, your imagination, sir. Because
Okay. Okay, sir. Thanks a lot and best of luck. We are happy shareholders.
Thank you, sir.
Thank you, sir.
Thank you very much, sir.
The next question would be from the line of Jay Mundra.
Sir.
Please unmute
Sir,
yourself
you can hear me?
and go
Hello.
ahead.
Yeah, hi sir.
Jay,
Yeah, hi sir. Sir, I have a question on your pricing. For
Jay, sir. Good evening.
Jay, your voice is not audible.
evening, can you hear me now? Is that better?
No, still not very clear. Can you come a bit closer on the handset?
Yeah, hi. Is it any better now?
Yeah, not
We'll try
better.
to understand, Jay. You
Sure.
ask the question, we'll try to understand.
Sure, sir. So, sir, the question is on repricing of your corporate loan of around 4 lakh crore, 6.98 trillion. How much of that should be repricing in quarter 2? That is the question.
See, what I understood is you asked about the corporate credit growth. Repricing of the corporate. Corporate repricing is also has completed almost 80% of that whatever it is there. And because many of these corporates, so where the short-term loans are there only our pricing is the concern. All the long-term loans pricing has been taken care initially also. In these short-term loans, we already taken care 80%, or we are continuing to repricing that. You can see that that has reflected in our average yield on advances. Our average yield on advances as on date is 8.4. It's in the highest so far in the last several quarters. That is continuing, and we, while even future taking of the proposals, because ample scope is there, growth is there, demand is there. We have seen so much traction in the corporate side also, but whilst funding, the pricing also is making our decision in favor of that. So that's why we are selective in both in the security side, the rating side, as well as in the pricing side. This attitude, this approach will continue in the future also.
Okay, sir. My question is, sir, if you look at the yield on advances, while they are up as per investor presentation, but I think the QOQ they have only increased by 5 basis point, right? Because the March number that is shown in the presentation is for full year FY23. So what I was trying to understand is, of the 4 lakh crore rupees loans of corporate loans, how much is yet to reprice in maybe second quarter? So you said 80% has already been
So
repriced.
that's what, sir, 80% has been repriced. The remaining 20% will be there, because most of the corporate lending is MCLR linked, sir. Our total assets may 52% is MCLR linked. Within this 52%, already 80% has been repriced, and the remaining 20% is, it will be repriced whenever it comes for that annual resetting.
Understood, sir. Sir, coming to your ROA guidance, right? So this quarter we have said we have delivered 1% and we are guiding for 1% for full year. However, if you see this quarter of around 4,800 crores of pre-tax profit, we have around 1,500 crore plus coming from PSL, which should decline significantly as we go ahead in the year. So what is the offset, sir? I mean, how would you recoup the loss from, or the loss of income from the PSL going into the next quarters?
If you look at that last 2 years or 3 years balance sheet, sir, in the June, our major contribution will be PSLC compared to their OP as well as the NP. The same tempo is continued in the current quarter also. But with the same background, last 2-3 years also, September to March, we could show that a minimum 15% growth rate both in the OP and a good growth consistency in the net profit also. The reason is, quarter on quarter you will get a better revenues in different areas. First quarter we might be dependent on the PSLC. But the second quarter, because already the stabilization has happened in first quarter itself, we have seen the 3% growth in the advances, of course, which might have happened majority in the June quarter. That's why the first quarter we might not have got the benefit out of NII. But the second quarter, since already 25,000 crores absolute numbers advances have increased, and this more and more disbursement, what we look at that, partly we wish to compensate with the interest income, sir. The remaining partly, the first quarter generally you look at that the recoveries will be comparatively lower than the other quarters. Look at that the March quarter we could recover the technical written off fees around 2,200. As against that first quarter we could recover only 790. So there is a huge scope on that. We have a book of almost 66,000 crores of written off accounts, which the first quarter, why the attention will be less is majority of the staff members will be transferred, their positions are changed, many people will be in the stabilization area. But when it comes for the second quarter to fourth quarter, the recovery under the technical written offs or the D4 or loss asset, whatever it's where the 100% provision has been made, there the recoveries will be very high. The third one is a fee income, sir. Fee income also, it contributes quarter on quarter. There is an increase at least 9 to 10% every quarter. And first quarter generally it will be less. So these are all the options we have on that. And with these options, what we are expecting is we could maintain whatever we have shown the growth in the current quarter, the same thing can reflect in that. It's not that we are totally dependent on PSLC.
Understood, sir. And was there any
Jay, we would request you to please come back in the queue. We have a lot of participants waiting. Sorry for that. Okay, the next question. Jay, we would request you to please come back in the queue. The next question would be from the line of Mr. Saket Kapoor. Please unmute yourself and go ahead.
Hello. Sir, you can hear me?
Yes, yes,
Good
Saket,
evening,
you're on.
Saket.
Yeah, good evening, sir, and thank you for this opportunity. Sir, if we look
You
at
ask-
your interest, uh, you can hear me now, sir?
Tell me.
Yes, sir. If we look at your interest on balances with the Reserve Bank, that has been at a highest number of 1109 crore. So what should be penciling in going ahead from this line item? And also, sir, on the others, there is a figure of 474 crore under the interest earned. So what is the composition of the same, and what should we read into it going ahead from these two line items? And then I have a question, one more question here, sir. Please, आप पहले ये answer कर दीजिए.
See, our CFO is there. He will answer your question. But actually, let me clarify to you. Afterwards, he will tell you that other interest income is overnight whenever you want to invest, either CBLO or anything. These the amounts will be captured on this. Whenever you have surplus liquidity, you will invest on overnight or some those things, CBLO and all those things. That's actually the amount we capture it. Generally, it carries on the same level of quarter on quarter increase, whatever it is there. It will be on those 1100 to 1400. That's the range generally it will happen. So now the CFO, so you can speak to.
As our MD sir said, that if you see that is quarter on quarter also, last quarter it is consistently showing an improvement over the period. It was 1100, 1500, 1100 last quarter and 1500 this quarter. So it's a component, as you yourself said, it's a component of interest on call money and deposit with banks, reverse repo, CBLO. So this is a figure which we feel that it will be almost consistent. I think it should be above 1000 crore, which we expected to garner, maybe a bit more also in the medium term. This much only we can tell you. There is not much apprehension there. And even if there is a shortfall here, that should be compensated by interest on advances.
So, CFO sir, you are clubbing both the figures, that is 1100 and 400.
No. I am telling you that I am only giving you a figure of interest on interest.
Telling that.
Yes.
Yes, sir.
Yes,
he
sir.
is clubbed both and he has given that answer.
Okay, and this will be a consistent number going ahead also.
Generally, sir, whenever suppose, see, when you have a surplus liquidity, we use that for this head of account. If you don't have surplus, that means this money will be diverted to disbursement in the loans. Then that will earn much more than that. That will reflect in the interest income.
Okay. MD sir, you mentioned about pressure on the yields going ahead, and that is because of our liability side getting.
No, just let me clarify to you. It's not on the stress on the yield, sir. I told you that to stress on the margins because of the more interest expenses.
Sir, but the net yield will be lower if there is a higher interest expense.
That's what, sir. Even that, with that, whatever the initiatives we have taken already against the first question, I think I answered that how many initiatives we have taken on the CASA front to garner the more low-cost deposits. With that, we are confident that we can manage at 3 and above, little above.
Okay, a small point, and then I'll come in the queue. Firstly, sir, for this year, we are looking at NIMs above 3%. We closed last year at 2.9. And this year,
yes,
I think so.
Last time cumulative it is 2.92 as against the guidance of 2.90. This time we have given a guidance of 3.05. We are confident that we will maintain above 3.
I didn't agree. 3 point.
That's what, sir. 3.05 we have given the guidance.
I'll join the queue.
3.05 we have given the guidance. but we are confident that we will maintain above 3.
Okay, so I'll join the queue again.
Thank you, Saket.
Thank you.
The next question we have from the line of Pritesh Bum. Please unmute yourself and go ahead.
Hi, can you hear me?
Yes, Pritesh ji. Good evening.
Yes. Sir, good evening, sir. Two questions from my side. Just needed data from the ECLGS. How much is the book and how much were the NPA from that book, if any?
Last time when we shared with you, we were at a very raw calculations.
Sir, ECLG, they want.
ECL?
GECL.
GECL. Sir, you are
Yeah,
asking about
GECL, sir.
GECL?
Correct. The government.
GECL actually GECL we have sanctioned actually 21,000 crores. Out of that 19,000 crores was dispersed. As on date, the balance outstanding was around 13,400 odd. Out of this, 800 crores has slipped to NPA.
Okay. Sir, and the restructured number as well, sir, if you can give that as well. Outstanding
No,
restructure.
restructure everything, RF1, RF2 and MSME restructuring everything. Earlier it was 23,000 crores. Now it has come down to the around 16,000 crores. Out of that 3,400 crores were NPA.
Got it. Sir, our SMA book also quarter on quarter has moved up. Anything to read into that? It's about 3,400 crores from a
No, sir.
1,500 crores.
SMA always you should look at not sequentially basis, year on year basis only you should look at that. Because the
Year
first
on year
quarter
also it is up,
generally in
sir.
a banking industry, no, just first quarter in the banking industry, the transfers vagara seasons will be there. The first quarter little less will be there. But you look at that the slippages in the first quarter of last year, it is 3,940 crores. Whereas against that, the current year slippages is only a 3,482 crores. 3,400 crores. If you look at only SMA 01 and 02, is higher in the first quarter is it generally happens in the first quarter may agriculture NPAs reflect more because the sowing season starts only from the June 15th and it will be available up to the September 30th. All these loans which falls due for the renewal from the 1st April to June, that will come for the renewals only in the June fag end to the September 30th. Then automatically this pressure will come down. Little pressure will be is there already in MSME, which we are focusing and well within our appetite. What we have given that you look at that the percentage also total SMA 1.29% to it has come down to 1.11%.
So this total SMA one is more of agri, which you're saying it's moved up because of that.
You are looking at SMA 1, that is a quarter on
Yes.
quarter it has increased to 3,482. No, the majority is from agriculture and MSME. The agriculture generally the first quarter may that will start renewing that limits. If they suppose when the due date is over, it reflects in the SMA 1, SMA 0 and 1. Once it has been renewed, that account will go to the standard asset. The farmers will come for renewals generally from the June 15th onwards, and the current quarter that will be drastically has come down, will come down.
Thank you.
Otherwise, there is no such threat on that.
Sure, sir. Thank you so much.
Thank you, Pritesh. We have our next question from the line of Ashlesh Sonje. Please unmute yourself and go ahead.
Hi team, good evening. Sir, just one question from my side. Do you see there is a need for you to raise term deposit rates over the next few quarters to garner term deposits?
No, sir. Literally, there is no not required because our retail term deposits is growing. You just look at that almost today as on date, we already grown 2% of that from April to now. We got almost 8,000 crores incremental growth in the retail term deposits at this current rate of interest. So when every day almost we are seeing more than 150 crores additions to my term deposits in the retail term deposits. When that is accumulation is there, that is enough to meet my requirements because I already told you that our CD ratio we have ample cushion. That cushion we want to use it for effective utilization of resources.
Okay. Sir, in that context, where do you expect your quarterly cost of funds to trend over the next few quarters?
See, that's what, sir. The present liquidity, unless otherwise in the market liquidity improves, the rate of interest on term deposits may not come down. And the current quarter, we don't see any such softening of rate of interest because in the 1st July onwards, little we have experienced little softness in the June month and May 15th onwards to June 30th. And we could reprice major part of our bulk deposits with a little lower rate of interest. But again, we have seen that July 1st onwards, the rates are little tightening and it's the market rate is little high. So unless the liquidity in the market improves, the present high rate of interest on the term deposits will continue. We don't see any change in the current quarter. The maybe the December quarter and March quarter, once the liquidity in the system improves, the rate of interest may be little softer.
Okay, sir. And just one last data keeping question. Can you give a breakup of your slippages across segments for the quarter?
Yes, sir. You can look at that around 1300 crores, 1380 is MSME, sir. Around 800 crores is agriculture, 600 crore is retail, and around 400 crores is mid corporate.
Okay, perfect, sir. Thank you.
Thank you, Ashlesh. We have a next question from the line of Rakesh Kumar. Please unmute yourself and go ahead.
Hi, thanks a lot, sir.
Good evening, Rakesh ji.
Good evening, sir. Thanks for the opportunity, sir. So, sir, firstly, the question was related to the recovery or return of loan number, which is 796 crore in the slide number 16. And then we have some other figure, given on, in slide number 28.
891.
Yeah, so
891, somewhere it has been given 891, somewhere it has given 796. The reason is where the 796 is the book balance. Where the remaining amount 100 crore is the interest on the technical return of accounts. The total together when it comes for there it is 899. So the book balance, because the profit may you can book directly, that's this what the slot they have shown under this slide is only a recovery towards the book balance of technical return of, sir.
Okay. So is there anything in the interest income line also coming from here?
Yes, sir. The
How much
interest,
is-
the interest income also.
How much is that number, sir?
The balance is, sir, 899 minus 796.
Minus 796 number.
Crores, sir.
Minus 796, yeah.
103 crores, sir.
Correct. And so this gain on FX gain number is what is happening there? Could you just slightly elaborate? There is a quite lot of volatility in that number. FX gain
Which one?
in the FX gain under the treasury income number, sir. So
Sir, we have our treasury head with us. So, Mr. Janardhan Rao, you are on mute. You unmute and speak. Is there? He cannot speak, huh? Janardhan Rao? So, otherwise, our Mahesh?
Yeah. Actually, this number you are referring to is the June 22 number, which is 952, and you are asking a question of 236. This is what you are asking, I believe.
correct, sir. And what is the underlying situation?
Yeah, underlying transactions, sir. Underlying transactions are the foreign exchange gains which has happened. This has reduced because of the spreads in the exchange transaction, which has come down hugely because of the US interest rate hikes. So if you see June 2022, the premiums were at the highest, and presently the premiums are at the lowest. So this is the number which reflects that. So from now on, we expect that the premiums to go up. So this number should go up technically from now on.
In March, we have gone to the bottom, but now in the current quarter, we have seen slightly increase. We expect that this increase will continue slowly.
So in the FX transactions, so only the value part is changing, or there's any change in the total transactional volume also for us?
No, it doesn't depend on purely on the transaction volume. If you see, the volume would have been remained more or less constant. This depends on the gain which you get out of the funds deployed in dollars.
Okay.
The swap
And sir,
market premiums.
got it. Understood.
Yeah.
So thirdly, sir, on this staff cost, have we started making any provision for the terminal benefits obligation? Because
No,
there is
terminal benefit always it will be provided quarterly, sir. There won't be any complacency on that. The staff benefits may even beyond that we have moved, and November onwards actually the wage revision is due for the revision last November onwards. So first 5 months we have provided 70 crores per quarter, almost to 350 crores, 350 to 370 crores we provided. But this quarter we have provided beyond that, almost we have taken 115 per quarter. That means we have provided an additional 350 crores only towards the wage revision, expected wage revision by the bipartite settlement, whatever it is going to enter into the IBA and the trade unions, effective from last November. So total more than 700 crores now as on date within these 8 months we have provided already.
okay. And anything for pension gratuity leaves?
We would request you to please come back in the queue.
The
We have a lot
pension,
of
whatever the funds, actuaries, whatever we are supposed to provide, everything has been taken care quarterly.
Good. Thank you. Thank you so much, sir. Thank you. Thanks, sir.
Thank you, Rakesh.
Thank you.
The next question is from the line of Nihal. Please unmute yourself and go ahead.
Hello, sir.
Good evening, Nihal.
Yeah, good evening. The quantitative number looks quite good. My question is on the quantitative side, that if what the company is doing to track customer retention, customer satisfaction, and encourage transparent banking. Because just to take an example, my father passed away 3 months back, and he was employee of Canara Bank. And even after 3 months, his account has been freezed, and my mother is waiting for the terminal compensation. So this is just an example, and this is the case of an Canara Bank employee. So what,
My request to Nihal, can you send it to my mail that so what are the details? Because we created in MD Secretariat itself for a personal mail on that. And there are certain people are working on that, and I myself is personally monitoring. And one more thing, for customer redressal resolution, first time in the bank we have created a vertical and is now presently headed by a general manager. We are paying so much attention on that to give a best customer service to the possible extent for consistent improvement on that. You also might have seen that whenever you go to that branches, no, there is a huge change on the even ambience, even the basic facilities it is to be required for the customers. The third one is from July 1st onwards to take care of retention of customer only. Mainly the retention of customer is aimed for that, the relationship manager concept, why we brought it. That in 5,000 branches we introduced where we felt that the savings CASA concentration is available. And with these 5,000, we have identified top 200 customers of that particular branch. And with this, we are covering 80% of our top SB individual balance outstanding. So our SB individual balance outstanding is around 2,60,000. And with this, we are covering almost 2,10,000 to 2,15,000 in their accounts. These customers have been now here afterwards, we are providing a personal relationship manager concept, and whom we have marked to them, that has been displayed in our website itself for genuineness, and from head office itself we have written directly letters to the respective individual customers. And thereafterwards we are also taking several initiatives on the customer redressal systems, that we are onboarding a complete comprehensive the customer relationship software, whatever it is there, which is under the process of procurement. Once the CRM package is introduced, this retention will be much more closely micro level, we can observe these things. And whatever the inconvenient caused to you, I am extremely sorry for that, Nihal. If you can send the details to me, I will take it as a personally and see that it is addressed immediately.
sounds quite good, sir. If you can add such data
Nihal, we request you to.
That would be great to track customer retention. And second,
The next question is from the line of Sushil Choksi. Please go ahead.
congratulations to Canara Bank team and management for excellent result.
Thank you, Sushil ji.
Sir, my sheet indicates that we are very conservative in whatever we are speaking today, and I'm happy to note that we'll outperform. Sir, can you throw some light on some initiatives which you have taken over last 1 or 2 quarters, whether it's technology, subsidiary listing, the roadmap after Mr. Iyer has taken over Canfin Foods, Canara Rebeco, and various other initiatives. The technology tie-up was in the news about IBM. We rolling out a big tender. The second thing is outlook on treasury. At the terminal end of the year, where would you be on the gross NPA, net NPA, and credit cost? Because I think we may be heading towards single digit, that is below 1% on the net NPA. And based on technical recovery, where would you see our end of the year kind of numbers?
Sir, first I'll touch upon that NPA ratios. Gross NPA, we are given the guidance at 4.50, and the net NPA, we are told that it is 1.20. But definitely by the end of this quarter, we will be below than that, whatever the guidance has been given. That much I can confidently say to you. Regarding the initiatives what we have taken, the technology side, let me share it with you, sir. I am very happy to share with you that the Canara Bank has been ranked number 1 consecutively second financial year by the mighty Ministry of Electronics and Information Technology. Based on that rankings, the rankings will be happened on the both public sector and private sector. Total 47 banks performance will be taken into account on various parameters like how their digital journeys are happening, how their digital transactions are happening, how their merchant onboarding is happening at rural or northeastern or various areas. Based on these, they rate the banks the marking for 100. And last year also, previous year also, the Canara Bank has rated number 1. And this year also, we continue to be rated. Just recently, 10 days back, only the mighty has come out with their ranking. And the Canara Bank has continued its number 1 rank. The second one, what I want to share it with you is the transparency in our onboarding any vendor management. The vendor management, the onboarding last continuously 2 years. GEM portal, the Canara Bank is the highest, the procured through GEM portal promoted by the expenditure ministry. That shows that whatever our internal investments what we are making on our new initiatives are a capital expenditure, that we are most transparent bank on India among all private and public sector banks. And as you are told there rightly that the news item is the IBM or Kendrill, which is 3,000 crores worth of contract that has been almost finalized, sir. The results have been announced. It is in the process. And not only this, sir, we have gone for the RFP for end-to-end digital lending, which is already almost to final stage for selecting that. Then continuous CRM package, the customer relationship management package, then the co-lending package. This is also it is there, and the onboarding the video KYC. This is also is there on that, and several such initiatives we are going on that. We are the bank, though we have been identified on the third instant that for introducing the CBDC, but the onboarding both customers as well as in the merchant side, we are the number 1 bank as on date in India, sir. The CBDC, our app is well received. Our mobile app AI1 in the July, after 15th, if you can look at that this is the highest rated public sector any mobile app that we got the public the Play Store, the Google Play Store or whatever the Play Store it is there, that rating has happened at 4.506. And we are the first banker who has our RuPay credit card has been integrated with the UPI payments. We are the first bank, we are coming out with our self-help groups honors and offers dual authorization through the BC points. We are the bank, we are very active on NCMC. That's a commutation ke liye, whatever the mobile cards what you are using, your existing RuPay card will be replaced, that your existing RuPay card can be used all wherever NCMC integration is there in the all metro railway stations, metro journeys or even transportation areas and all. And we are the first banker who has onboarded bill payment for the Oman customers across the board. Like that, many technical initiatives we are taking. Our mighty ranking continuously the second year, that shows that our whatever the efforts, we say less but we do more. That has been proved once again in the technology front. In the business front, in the first quarter itself, we have taken several initiatives. Like already we told that innovative products we have launched in CASA to attract the customers. We have launched one bank, one call center, that is 1030 1800 1030. This call center, through this call center, 24 by 7, 365 days, 35 services can be availed in 12 languages. That has been created, that has helped us a lot to reach the customer. The one more is, we are very active in spreading the QR code and the audio systems to the merchant establishment. We are targeting for the street vendors where the Prime Minister PM Swanidhi, the beneficiaries are there. Those beneficiaries, we already covered more than 1 lakh such customers have been provided with this QR code, and onboarding them on the digital transactions. In this, among 11,000 people have been given the first time in the public sector banks that audio system has been introduced and provided to the customers. And these initiatives will continue in future also. The both at the service wise, the people who comes to the branch, we are giving a innovative products. The people, the younger generation who does not want to come to us, for them also we are aiming and introducing so many new products. There are several new other products on the loan side as well as in the CASA side, targeting sectors, women as well as the younger generation. But those products are in research side. We have completed that. Still it is yet to be in the UAT. We may launch in the next quarter. And regarding the treasury, I request our Mukherjee sir to pay on that a little. He will share it with you. That's what is going to be by the end of this year, whether we are expecting the same returns or any increase in the returns under that.
Sir, you forgot about
Sir.
No problem.
Tell me, sir.
Question after Devashish Mukherjee, sir.
ठीक है sir.
No, it's fine. But thank you, sir. With regard to Treasury, as we are all aware, it is market driven, and because of these rising yields at the present scenario, things are not doing as much as we would expect. But in the days to come, when some yields decrease, there we are poised to make some better profits. So that is with regard to the Treasury. With regard to the Treasury, I would like to mention a few more points. That during June, our portfolio MD is comfortable at 4.74. AFMD is comfortable at 3.45. And then our PV01, AFS and HFT is 7.81 crores. Portfolio yield has increased from March 23 to 6.85%. Overall, a healthy portfolio which we are going to carry forward in the coming quarters as well.
Shokshi sir, you are asking something?
Yes, sir. Either yourself or Dada can answer outlook on subsidiaries and the roadmap which you are already decided or working on.
So that's sir, we have actually subsidiaries and associates and regional rural banks, total together 13 are there in our bank. All have been this June quarter we displayed already that everybody is earning the net profits. No subsidiary or associate is incurring any loss on that, and these profits also showing a steady growth on that. You have seen that Canfin Homes, whatever the market has reacted, we have taken several initiatives on growth side and all those things. And I am sure that Canfin Homes will continue to work on that. The remaining two, we have promised, we have given a guidance to the stakeholders that the Canara HSBC and Canara Robeco, that we have initiated to come out of that public issue IPO, and that the action has been just started. It takes a minimum 15 months, sir, 15 to 18 months. We expect that the next financial year, in the second half of that next financial year, these two companies may come out for the IPO. And then again, I shared with you that our credit card wing, the division, we would like to shift it to our own 100% owned subsidiary. For that, we identify our Canara Bank Financial Services, but that there our Canara Bank Computer Services (CCSL), where our share price, our shareholding is only 69%. We already written to the remaining three stakeholders for purchasing of. We expressed our interest to purchase that remaining 31% stake. The negotiations are on. We are hopeful of getting it completely by I think around in the next quarter, sir.
Sir, my last question is that we have pruned our number from last quarter on ECL provision much lesser than what you had spoken, sir. That would be icing on the cake. So can you highlight that number?
Yes, sir. Actually, initially last quarter, whatever we have shared, that's a rough calculation on very initial stages. But there afterwards, we sought some clarifications. We also reworked on our calculations and all. It has come down more than 50% of what we actually last time shared with you. And thereafter was a further tuning. Now it has come down to the around effect is only 2 to 2.25% of effect. And now further we are onboarded consultant on that to further guide in this regard. Once he will be with us for that's the next 1 year period till that is implemented, sir, so that we take his expertise in further reducing these things, and we are sure that we will be in line with the other banks and it will be around only 2%.
So thank you for answering all my questions and all the best to Team Canara for the years to come.
Thank you so much, sir. Thank you so much.
This would be our last question for the day. I request MD sir for his closing comments.
So thank you so much, sir, for everybody. Whatever we thank to all our well-wishers and investors and all. With your great support, we want to continue our steady growth. We are very much particular about the consistency in our growth, and that consistency will reflect in all our key parameters in quarter on quarter. We assure you on behalf of all the entire top management that this consistency will continue in the coming quarters too. Thank you very much, sir.
Thank you, sir, for giving us this opportunity to host this call. I request everybody to sign off. Okay. Thank you.
Thank you, sir.
Thank you.